What's up guys, welcome back to another video. My name is Nick and I talk all about trading and investing, and in today's video we're going to talk about an account that I officially have flipped, meaning 100% gains on this account, how long it took me, how I did it, and some realistic expectations to go along with how flipping accounts is possible, but it takes time, and we're going to talk about how to actually do it right. So stay tuned, let's get into this video right now. Hey guys, thanks so much for joining me on another video, and for those of you guys who support the channel, thank you so much. I do appreciate it. All your likes and your subscribes do really help to grow the channel and to share these sort of realistic trading messages with more people. If that is something you're down for and you want to see more content like this, make sure to subscribe if you have not already. So what I've got here pulled up on the screen is actually my Webull account here. Now this account is an account mostly in stock, so this is more of a stock trading account rather than a forex account, which a lot of you guys are used to, but I've definitely traded both. I've actually traded stocks longer than I have traded forex. Now with stocks I'm a little bit less active, so I'm not in and out of the market all the time with stocks, but I have been doing some swing trading here in 2020 just because we had such a great dip in the 2020 market. Now, during that time, I made a video about how I wanted to buy some of the stocks that I've always wanted to do. In today's video, traders, I'm going to be talking about my 2020 stock portfolio that I've added $50,000 to in a time of a serious market crash. And I got so many questions and concerns of people who are saying, Nick, this doesn't look like the bottom. This could be a 10-year long recession, and all these messages that were, super concerned. And of course, who can blame them? When the market is tanking and down 30% in a matter of a few weeks, it looks like it's probably going to be the end of the world. But fortunately, the markets did rally back, and I was able to catch some really good swing trades on the way up. I recently bought Tesla, I bought Disney, I bought Delta, I bought Google, Facebook, Apple, and we're going to go look at those positions in just a moment. But even if you're not a stock trader, I think that these methods or these concepts that I'm talking about in this video can apply to all sort of trading and investing in general. So this account is my most active, if you will, stock trading account. I have other stock trading accounts. I've got another Robinhood one where I just buy super long term and that's it. I buy index funds, and I buy things like slow and steady dividend stocks that pay out on a quarterly basis, that sort of thing. So I have two different accounts. This is my more aggressive account because this account, if we look at the 1 year growth, it went from, in about March when I started this account, from $50,000 all the way throughout this time up to 60, up to 70, up to 80, up to 90, and just today as I came into the office hit just about 100,000. Now this video, it's gonna make me look bad because it's probably gonna drop under 100,000 just to mess with me. But the idea here is that the account itself actually has gone from roughly $50,000 initial to $100,000 now, and that's only from, what is that, from March, or let's say April. It started April now until the end of 2020. I don't know how many months that is. Is that 8 or something, around 8 or 9 months of trading this account, and you can see the equity curve has been really strong. Now I have to give a little bit of a disclaimer here because I've been only really buying. I haven't been shorting things. I took a couple short positions in this account during this time. I think I took a short on JP Morgan, which ended up being a loser. But for the most part, this account has been a long biased account. And of course, we've had an incredible rally in 2020. So I would have to leave that in there, that the honest truth is that I've only been buying stocks and being relatively aggressive. And so doubling this account, although still a really good accomplishment, I have to pat myself on the back there, it's still in a market where the market is very favorable and moving bullish in favor of my trades. Basically, the wind is in my sails. So I wouldn't go around saying that every 8 months I'm going to double accounts, because this is sort of a rare situation. And if you have been watching the channel for a while, you know back when I made those videos that I said, hey, this is kind of a rare situation in a time that, for me, buying is not something that I'm going to take lightly here. This is an opportunity. This is a 30% dip on the markets. These stocks are on sale, and that was my opinion. And of course, I could have been wrong about that. But fortunately I wasn't, and so let's take a look at some of the trades that I ended up taking. So I've been trading the S&P 500 back and forth a little bit during this time, so that's been kind of one of my active ones, but a couple of these I've just held since March. For example, the big ones being Tesla, which actually, let's do this, we'll change unrealized profit. So the biggest winner in this account by far is Tesla, and Tesla has been, Tesla's like my baby when it comes to stocks. I love Tesla stock. I've owned this stock for a while on and off, but I bought this stock right away in March because it was at a dip after a major run up before the whole pandemic situation. The stock went crazy, and then the pandemic created a really big dip in Tesla, and this to me was a big buying opportunity, and so I stuck $10,000 in Tesla, which is a lot, or did I? Let me actually double check. I think no, I spent $5,000. I should have done, hindsight bias, I should have put $10,000 in this, but I put $5,000 in Tesla of this account, which is a lot, because if you know anything about, balancing a stock portfolio or any portfolio like this, I basically took a 10% risk, right? Because $5,000 is 10% of my overall $50,000 investment. So seeing Tesla go up and down was definitely a wild ride. Fortunately, we caught a really good run up on Tesla, and that position, which I bought at $99.99 a share, I can always say that I got it under $100 a share. Because of the stock split, is now trading today at $679 a share, which is a really incredible growth. So that's more than 6 times the money that I invested. So that one was a big winner on the account. Without Tesla, I would still be up pretty decently though, because we've got Apple, which netted the account $6,800 so far. We've got Disney here, which is up $38.75. Which is actually impressive. Disney is one of my top performing ones, and Disney is a relatively slow and steady stock. This is like trading Euro USD in the currency market. It's like a slower, less volatile stock usually, but we've seen some really incredible stuff happen in 2020, and Disney was one of my more cautious buys just because the amusement parks were shutting down due to the pandemic, but I still like the company. I like Disney Plus. I think that they've got a good thing going there. I love their movies also, because Disney, what they do is they have all these great stories that they've already written. Think of Aladdin, think of The Lion King, and they repackage them. Lately, they've been repackaging movies, putting them out in theaters, and then making $1 billion or more off of some of these movies, which I think is incredible. So definitely why I'm a big bull on Disney. Google is a big winner for the account. Facebook was a big winner for the account. McDonald's is a company that I just have liked for a long time. I like their business model. And if you've ever seen the movie The Founder, you should definitely check out that movie. It's great. It's a really good entrepreneur movie, although it's interesting. Check it out. It's about the findings of McDonald's. Alibaba is a Chinese company. They're kind of like the Chinese Amazon is their nickname. They do a lot of e-commerce stuff. And then you've got Johnson & Johnson, which is kind of a slow and steady pick, but I just wanted to add it to the portfolio. So I've held this one for a while. The SPY, of course, AT&T, and Intel Corporation. So let's talk briefly about some of the trades that have been going on in this account so far. So a lot of what I've done is back and forth buying and selling of the SPY and things like that. I haven't really dabbled with options, although I have talked about it with Will. I think I may get into trying out options, but if I do so, it'll be on a small account and probably a demo account, because truthfully, I don't know a bunch about options, and anything that I don't know a bunch about, I'm not going to go risk this $100,000 account on. So I'm going to take it slow, take time with it, maybe get into options. We'll see. But the main point is that this account took time to double. It was not overnight, and it was in an unusual circumstance. So that brings me to the next part of this video. What is it realistic to expect for doubling an account? And the reality with doubling an account is that it does take time. It does take good trades that don't come every single day or month or a year, and it does take not necessarily luck, but a string of good trades or a good fortune period of time to really double an account. So when I talk about doubling an account, the big thing is that, again, you have to have a strategy that adheres to your level of risk tolerance. Because for me, I stuck this money in there knowing that the market could drop way further. And if the market dropped way further, I was ready to go buy some more stocks that I liked on a deeper sale, if you will. So I was in this with a high level of risk tolerance. So yes, I doubled the account in 8 or 9 months, but the lesson here is I didn't do it on, taking minimal risk and, just saying, hey, if it goes up, that's great. No, I took a pretty sizable amount of risk. I put $50,000 of my own money down on this account, in addition to the $100,000 that I've got in my other stock market account, right? I took a lot of risk there to try and take an aggressive stance on the market, and fortunately it really paid off. Sometimes it's not going to pay off so well, and so you have to know these things. You can't look at me, and it would be irresponsible of me as a creator in this space and as a trader or investor to just go around and say, oh yeah, it was easy, I knew it was going to go up. I didn't know that. I took a risk that was calculated, that I thought had a better chance of working out than not, and overall it really worked out. And so I can't take all the credit, but I can take some of the credit, because again, it does take calculated risk management and calculated decision making that gets you into these situations where you can double an account. Now, reasonably for me, doubling account usually would take not just 8 months. It would usually take a few years, honestly. But just given the circumstance of 2020, there was some really good dip buying opportunities that fortunately I capitalized on in this account, and doubled the account in 8 or 9 months. Whatever April is to December, I'm going to do it really quick. April, May, June, July, August, September, October, November, December. So 9 months. Okay, 9 months. Sorry about that. Thank you guys so much for watching. I hope you did enjoy. Make sure to subscribe down below if you want to see more trading and investing content. I talk all about the stock market and the foreign exchange market. So if you enjoy that sort of stuff, subscribe, and we'll see you back in the next video.